past few Signal episodes, we've been walking through India's key sectors, understanding how each one fits country's long-term growth story. We began with banking and financial services, the system that funds expansion. Then we moved to consumer and retail, India's demand engine. And this was followed by information technology, the backbone of global digital transformation. We then covered automobiles and the EV transition, where manufacturing meets mobility. And in our last episode, we examined capital goods and manufacturing, the sector driving India's capex cycle. And now that we've looked into how India is lending, consuming, digitising, moving and manufacturing, in today's Signal episode 20, let's turn our attention to powering progress, energizing growth and sustainability of system itself, the energy, power and renewable sector. So let's begin with strategy of the week, move to story of the week, share a fun fact, review market highlights and close it with quote of the week. Welcome back to Signal, where noisy markets meet simple, sharp and sound insights for long-term investors. When we talk about India's energy sector, we are talking about capacity, continuity and transition. India's energy story is not about choosing between the old and the new. It's about managing the growth while transitioning responsibly. India's power consumption rises with economic development. More households, more manufacturing, more data centers, electrification of transportation, and deeper industrial automation. This demand does not move in short cycles. It expands with progress. Renewables are expanding rapidly, while conventional power continues to anchor base load stability. At the same time, transformation is unfolding across generations. Grid modernization, transmission and storage, turning energy into a long-duration infrastructure theme. Energy projects are capital-intensive and policy-linked. Execution timelines, balance sheet strength and cash flow visibility determines who compounds value across cycles and who struggles. So how should investors approach energy and renewable sector? When investors think about investing in energy and renewable sector, three questions usually come up. Do I have an exposure? Should I need to add more to the theme? Should I directly invest in stocks? In most cases, diversified equity funds already hold established energy and power companies, allowing investors to participate in sectors' long-term growth without taking concentration risk. For those investors seeking targeted participation, energy and renewable focused funds or sectoral funds can play a role, provided allocation is measured due to valuation swings and regulatory sensitivities. Direct stock investing demands even greater discipline. Balance sheets, execution timelines, cash flows matter more than capacity headlines. And this is where a SEBI registered investment advisor adds value by helping investors decide how much, where, and why energy fits in their portfolio. In 2021, as renewable energy gained attention, most of the conversations focused on capacity, megawatts announced, commissioning of solar parks, and installation of wind farms. But Neeraj, a 41-year-old electrical engineer, asked a different question. What keeps the system running when demand surges and conditions change? With decades of experience in grids and transmission, Neeraj knew that generation was only one layer of the energy story. After reviewing the sector with his SEBI registered investment advisor, he recognized that transmission, grid stability, storage, and execution reliability are equally critical. With this informed understanding, Neeraj modestly increased his exposure by adding measured sectoral allocation while keeping his core portfolio diversified and continuing his SIPs. As India's energy transition progressed, markets began recognizing not only the producers but enablers that move, balance, and scale the energy system. Neeraj's journey highlights a simple but powerful truth. It is important to participate in emerging themes, but a sound judgment comes by stepping back and asking a more fundamental question. What keeps the system running? Please allow me to share a fun fact about electricity that I learned while researching the energy, power, and renewable sector. Unlike water and fuel, electricity cannot be easily stored at scale. Every second, the power grid must balance the supply and demand in real time. If that balance slips even briefly, lights go out. Not because power wasn't generated, but because the system couldn't stay stable. And that's why in the energy world, the grid is just as important as the power plant. Now that brings us to the market highlights of the week ending 19th December 2025. The Sensex closed at about 84,929 points, down by about 338 points from last week's close. The Nifty ended near 25,966 points, down by about 80 points from last week's close. Markets were shaped by mixed global cues. Soft US inflation raised the hopes of future rate cuts, while firm US dollar and elevated global yields kept the risk appetite measured. Large cap and defensive sectors showed relative resilience, while cyclicals saw profit booking after recent gains, indicating rotation rather than broad directional moves. Foreign investors were cautious overall, while domestic institutional flows helped absorb selling pressure. The rupee ended near 89.5 per US dollar, reflecting firm US dollar and persistent global currency pressure. Overall, a week of consolidation where early weakness due to global cues was balanced by domestic support as investors remain cautious ahead of year's end. And that's a useful parallel to India's energy sector. Performance is just not defined by smooth days, but also by resilience during uncertainties. And that's where this engineering principle offers a powerful reminder. The strength of a system is revealed not when everything works, but when it is tested. For long-term investors, the message is simple. Markets, sectors, and portfolios are not defined by easy conditions. They are defined by how well they hold themselves during challenges and uncertainties. Portfolios built with structure, discipline, and resilience endure and benefit over the full cycle. And here is where a SEBI registered investment advisor can help by bringing objectivity, sizing discipline, and portfolio structure to support investors, not just in the market when it's calm, but also when they are tested. We are building a strong community of prudent, patient, and perceptive long-term investors. If you're one of them, why not like and subscribe us? And tell us in comments which part of India's energy ecosystem you believe will matter the most in the next decade. Generation, grid, or storage?